All right, let's start with Tesla, and it has been pretty impressive, of course, in given what's going on, particularly with those supply chain issues and China shutdowns.
You know, these are mammoth numbers, especially in light of what we're seeing with China. And then overall, in EV demand right now is outstripping supply for Tesla by about 30%. So I think those numbers last night, especially the profitability, stock, it faded a bit, but I believe that's enough that's really going to drive the stock higher, despite right now the elephant in the room is China, because that's obviously been, a key artery for them and about 50,000 units coming out of the quarter.
Right, so I guess the key is how they're going to ramp up production if China remains a drag for them.
Well, I mean, the 3 week shutdown, that was obviously a disaster, but I can tell you as of today, it's ramping quicker than it was before the shutdown. So I think that's really the big focus for investors. It feels like the factory in China is accelerating. And I think there are positive comments in the call. I think that's a read through to what we're probably going to see with Apple next week, as well as, overall on the semi side, we're starting to see some slight improvement in the supply chain. But for Tesla, in terms of those numbers, I'll call them Cinderella like relative to street expectations.
Overall, Dan, in this EV space, how well is Tesla placed right now, given the march it has on particularly those legacy car makers?
Yeah, I mean, right now in the EV landscape, it's Tesla's world and everyone else is paying rent in terms of where they play. Now, look, competition is going to be increasing across the board, but I believe there's about 5 trillion, and they probably own about two and a half of that. So this is really their market to lose.